Welcome everybody to the GrowingAU show, where we are going over the stock market's winners and losers to help you find the best way to have your money work for you. One of the best ways to ensure that your money's working for you is to know how your money works, and that's what we're going to be talking all about in this show. Today specifically, we're going to be going over Starbucks' second quarter earnings call to talk about what it means for their company and whether or not this is the right time for you as an investor to get involved and invested in the Starbucks Corporation. The earnings call yesterday was quite interesting, honestly, with Kevin Johnson leading it off with an overview. It's kind of a tense environment going into it. After all, Starbucks had missed their expected EPS by 2 cents, but still that was it. Missing an EPS at all is going to have negative effects on the stock. We saw that today with Starbucks stock being down almost 2%. So what we're going to do is kind of look at what did Kevin Johnson have to say. We're going to see what CFO Pat Grismer had to say and just kind of determine what that means for the future of the company. Kevin Johnson opened it up with an overview and saying that Q2 was shaping up to be a great quarter. After all, they came off a pretty strong first quarter. They beat expectations in quarter one, but the problem was, China, a big emerging market for Starbucks, they're putting a lot of time and energy there, was really affected by the coronavirus through the majority of quarter two. They knew going into quarter two that results may be rather poor due to the fact that the coronavirus pandemic was having such a large effect on the company, and understandably so. So revenue of $6 billion was reported for quarter two, which was down 5% compared to the previous year. They had a 10% contraction in in-store sales, as well as an offset channel development. China had been, as I said, affected for a longer period of time, which had decreased revenue there by 50% for the quarter. However, despite everything that's happening in China, they still plan on opening 500 new stores, which is 80% of their goal for 2020, and they're basically having to push off about 100 new stores into 2021. Again, they're putting a lot of effort into China. They had just recently launched their Good marketing campaign, which is focused on both environmental and alternative to products, including alternative milks. That's again like almond milk, oat milk, beef-free proteins, and also region-specific menu items. This is actually talked about in a press release of CEO at Starbucks China, Belinda Wong, who says that we are going to be innovations created in China for China. It was very clear that they are playing the long game in China and that the Shanghai roastery still plans on opening in 2022. This is going to be a ginormous bean roastery, one of the largest in the world, the largest in Asia by far, set to be able to supply upwards of 6,000 Starbucks stores across that region, really allowing them to tap into untapped markets. It's going to do some really incredible things for them. And again, they say that their brand is strong in China. It continues to build over time. And really what they've done is they've been able to, through their investment in China, through their continual growth of the brand there, they've been able to see, with China now entering into the recovery phases of the coronavirus, they've been able to kind of make a plan there, formulate a strategy that they're now able to implement in a monitor and adapt approach throughout the United States, Canada, Japan, and their other major markets across the globe to really get everything running back to full capacity. But still, quarter two, we were down 2 cents on the EPS. They were down 5% on their revenue and down 10% on their in-store sales. As far as the US is concerned, before coronavirus, Kevin Johnson talks about how we had the strongest level of growth in 4 years. Unfortunately, though, they experienced heavy losses in the latter half of Q2. The last 3 weeks is when things really started to get bad for Starbucks. Before that, they were able to maintain relatively well, but the last 3 weeks of quarter two, things really started to fall apart. After all, there's only so much you can do after that long of a time with your business being affected by coronavirus. Starbucks did have slight resiliency, though, as 60% of US stores were drive-through functional, and 80% of the orders before the coronavirus were takeout anyway. So a lot of people were used to simply driving through Starbucks or having a mobile order ready to go and getting their order to go. So that did help them a little bit. It kind of padded that fallout. People were still used to getting their coffee on the run and not going into the cafe. So that helped them a little bit. Adapt and monitor approach policy. They want to have 90% of their stores in the US open by early June. That would be a great goal. That would pretty much get them running to almost full capacity. Early June, 90% of the stores we open to some effect. In May 4th, which is just now Monday, a few days away, they're going to be opening a number of their Starbucks stores at some capacity. That could be limited hours. That can be just drive-through only. That could be outside pickup, but they're going to really be trying to get things back to normal. China, they're already started to focus on new growth, but the other markets, it's really just opening them back up. They're not even to a point of recovery yet because the environments and regions in which they're involved are not yet in the recovery stages of this entire pandemic. So It's really hard for Kevin Johnson to kind of give any really guidance or planning for the US, Canada, Japan, other markets because of the fact that they're still not yet recovering. All they can really do is say that we've perfected our approach and our reopening plans in China, and now we're going to implement them here, and they should work very similar. So as far as their channel production is concerned, this is all of their sales outside of the store. The Global Coffee Alliance, which is something they had with Nestle, it started about 20 months ago, did really well, and their partnerships with Pepsi allowed the brand to continually connect with customers in stores throughout Q2. These customers who weren't going to the Starbucks cafes were able to still get Starbucks products in the grocery stores, and that was up 16% in Q2, so some really good growth there. And the Global Coffee Alliance with Nestle, which was formed, as I said, about 20 months ago, has allowed Starbucks to enter into 50 new market spaces in that time. That's new customers, that's new sales, and that allowed them to kind of pad the fallout a little bit in this time. So that was all that Kevin Johnson had to say. He did conclude his part of the call with a just thanking partners, thanking the workers of the store, thanking the customers. Starbucks has been doing a lot to kind of maintain their customer safety, both allowing for higher pay to customers who are working and catastrophe pay to customers who are not working. So they've been doing a lot there and investing in their partners, knowing that they may take losses in the short term, but they want to sustain their growth in the long term, and this is the best way to do that. So Patrick Grissom, the CFO, kind of talked next, and here's what he had to say. So the financial results were seriously impaired due to the coronavirus outbreak. Again, revenue of $6 billion, which is down 5%, a $95 million decrease due to the coronavirus, non-GAAP EPS of 32 cents, which was down 45% due to the coronavirus. As far as the international markets are concerned, $395 million in revenue, a 31% decrease in store sales, which was padded by 11% new store growth. So we're talking about they're opening a lot of stores in China. Those stores are growing. That helped bolster some of the other stores that we're starting to see a decrease in their sales. They see China returning to about a flat rate in Q4. 500 new stores open and a revenue of 750 to 850 million and an EPS impact of 30 cents. Really going to be interested to see what happens in China. They're worried that Q3 can be even worse than Q2. But again, they're worried about the negative financial impacts that will be greatest in Q3 and possibly even leach over into Q4. Whether or not that's going to happen, it's hard to say. They are prepared for the fact that some of the losses have yet to catch up with them, and they're going to continue through this third quarter and possibly into quarter four. And the other markets they expect to mimic the US. They're prepared for a possibly negative 2020 year. But the way I see it is they're playing the game smart. They're playing it with the knowledge that there's a long term, that eventually we will be through this. So conserve as much as possible, save as much as possible now to really set the company up in a great position when everything opens back up and when we move past this time that we're in. Again, this is just shown by how much they're investing into their emerging markets in China. They understand there's opportunity. There is still growth to be had. So they're going to try and reopen as much as they can, as safely, but also as efficiently as they can, just to, in an effort, get everything back up to normal, with hopefully moving back on that positive foot in 2021, possibly end of 2020 if possible. But again, they are prepared for those negative results to stem through the rest of the year. I see Starbucks as a company that continues to grow. They continue to find new ways to evolve and adapt. They are not a stagnant company by any means. They've had a relatively decent last 5 years. Kind of a iffy point between 2015 and 2018 with kind of underperforming results. But since 2018, they were really good and shaping up to have a great 2020 year until this outbreak did occur. That being said, I think there's a lot to know about Starbucks. That earnings call is available online if you are interested in listening to it. That'll be linked on our website, along with the sheet going over some of the main points all on our website. Also, speaking of our website, if you are interested in learning more about the stocks, if you're interested in starting to know how to analyze the stock market, starting to know some of the right questions to ask, I highly recommend you go sign up for our email list. With just entering your email, you will get a free, no cost to you, 8-page ebook that'll include some of the very basic stuff that you need to know when it comes to analyzing the stock market. You're going to get to know what some of the lingo means, some of the terms, with some of the graphs, some of the equations, the different types of investing, different types of trading. A lot of that will be included in that little 8-page ebook for your viewing. Definitely recommend you go check that out. Also, signing up for that email list will give you all of our stock typed up breakdowns as soon as they are released. They're going to come right to you. You do not have to wait for them. Really hope that you enjoyed this episode. Hope that you enjoyed this Q2 breakdown. Let me know in the comments down below what you think about Starbucks. Do you think they're going to be resilient? Do you think they're going to continue to grow over this kind of rough period, an unprecedented period? Or do you think it's really going to take a firm hit on the company? Let me know what you think down below. If you really liked, consider subscribing, giving us a like, giving us a share. I really appreciate it. Everyone listening today, guys. This has been the GrowingAU Show. I'm your host, John Knott. As always, we will see you next time.